Been a very rocky day on Wall Street as stocks fall amid worry over higher interest rates.
Let's go back to Tia, who's getting a closer look at what this all means. Tia.
Yeah, this has not been a day for a lot of people that they care to remember, but what a difference a day makes. That is for sure. We watched as Wall Street bounce back Wednesday after interest rates increased. And here to break it all down is Scott Martin, Chief Investment Officer of Kingsview Investment Management. Thank you so much for being with us.
Hey, Tia, how you doing?
Hey, I'm doing good. We talked a little bit about well, I guess I'm doing okay. I shouldn't say I'm doing good, but
it depends what you're looking at. If
it depends on how you're looking at it.
Maybe not, but tomorrow's a different day.
Yeah, absolutely. Let's talk about the stocks right now. You know, there's a lot of stocks that people watch to see how they're holding up, to really analyze the market. We know at least today, Amazon is down just 7%. We're talking today only, okay? Apple is down and some of the other bigger names. What does that tell you about the market right now?
One, that the market's in a very bad mood, acting very poorly, acting like Johnny Depp, for example, or maybe the guy that attacked Dave Chappelle. But in that sense, acting in a sense where, as a long-term investor, as many of us are, we manage money for many local clients in the Chicago area and beyond, that Tia, there's an opportunity here. Now, the tough part is we're not sure where the bottom is. We're not sure where these markets will calm down. We're not sure where things will get a better sense of, say, calm. But the reality is we've been through these markets before. This happens every couple of years. We actually had this occurrence back in March of 2020 when we're getting into this COVID throes of desperation. So markets do this. And what you have to do as an individual investor is obviously work with an advisor and figure out what your risk profile is and realize that tomorrow is probably not the day to be worried about the stocks, but thinking things 6, 12, 18 months long term, and buying those good companies, like you mentioned, like Amazon and so forth, are ways to make money over the course of time.
You're right. The everyday person may be able to get in right now where they may not have been able to get in a few months ago. Okay, looking at the market right now, you know, a lot of people are talking about that big R word. I'm talking about recession. Do you think we're actually headed in that direction, and what could be done to stop it?
I don't. So recession is defined as what's called 2 quarters, so 2 3-month periods back to back of negative, and this is going to excite everybody, GDP growth, gross domestic product growth, output of the economy, effectively, what we make in the United States. That's what the recession is defined as. We already had one, actually. We've already just got one just reported for Q1, meaning from the January to April period, January to March period, rather, just reported. So there's a chance we could have one, but it could be a very shallow one. I actually believe, and a lot of my team members believe, if we do have any slowdown in growth, it's going to be very temporary because of 2 things. 1, the consumer is very strong. 2, demand is very strong. And 3, the labor market is very tight. And even though interest rates have been going up, the Federal Reserve raised the interest rate, the benchmark interest rate 50 basis points yesterday, rates are still very low. Borrowing costs, yes, they feel like they're pretty stringent, but they're not that bad considering how they've been in history, are still pretty low. Therefore, growth will resurge. Companies will come back, R&D will happen, the economy will grow again. Take advantage of any kind of weakness in this market, buy in and, say, recalibrate your portfolio to get to that next step, which I believe is higher prices eventually.
Okay, you said take advantage. So if someone's watching right now and they're not really sure where to put their money, what would you suggest?
Call me. Take a deep breath and then call me. You know what I mean? Call me maybe. But seriously, like, take a deep breath and think about how these last few days have made you feel. The nice thing that the market does for us, Tia, is it does allow us to experience emotions that we go through when we see the prices move all over the place. So you have to think about what you can deal with. But I will tell many of you that are out there, and I'm one too, I felt terrible the last few days. Like I was joking with the anchors before it. It's like I picked the wrong week to totally quit smoking, right? Because, I mean, this is a week when you definitely need to have some sort of vice to get away from the screens. But the reality is this: make sure you're aware of what your risk tolerance is, how these markets have made you feel, work with an advisor, and think about the future versus, say, maybe today, because we've been through these markets before, and every time, the one thing I can tell you is every time we've had these periods, whether it's all the way back to 1978, 1987, 1994, I'll go on, 1999, 2001, 2005, on and on, 2008, the market does go up again because it is positively sloped. So that's something to keep in mind if you're a long-term investor and have some patience and have some wherewithal to pick good companies.
The bounce back is inevitable. All right, Scott Martin, it's always a pleasure to have you here on First to Fourth. Thank you for being with us. Stop smoking.
See ya.
Stop the smoking.
Yes.
All right.